or gold mines that were not economical at $1,000 an ounce are now viable at 3,000. So they go rush and reopen them, and then they work, 3 shifts instead of 1 shift. They crank it up, and that, of course, if you expand the supply, that will take the edge off the price. And Bitcoin doesn't have that.
That's the stock to flow.
Yeah, it's pure. I mean, I think, and of course, the other problem with gold is it's funny because the gold bugs like Peter Schiff will argue that gold is better because it has industrial uses and it's used for jewelry, but that's actually an impediment because that's competing with the monetary use. So Bitcoin is a pure monetary use commodity. It's actually a better commodity money, in my opinion, and it's not elastic in its rate of supply.
Gold had centuries. Bitcoin has decades. Adam Back argues the flippening may be closer than you think. Adam Back, a renowned cryptographer and inventor of Hashcash, continues to shape the Bitcoin narrative with his sharp insights into its role as hard money. With Bitcoin consolidating around the $115,000 resistance, analysts remain confident in technical patterns that point toward a potential rally into the $150,000 to $200,000 range. Back notes that the world is once again experimenting with hard money, echoing gold-based systems of prior centuries. However, he stresses a pragmatic approach. Before Bitcoin becomes the ultimate digital gold standard, it must first surpass physical gold. That milestone is now closer than many realize, with Bitcoin's market size less than 10 times away from gold's despite gold's own price surge. A key factor Back highlights is the ETF dynamic. While gold ETFs dominate a smaller share of gold's market, Bitcoin ETFs hold a much larger proportion, giving traditional investors, especially older generations, an easier entry point through brokers. This accessibility may drive capital rotation out of gold ETFs and into Bitcoin ETFs, amplifying Bitcoin's momentum. Unlike gold, which responds to price spikes with increased mining, Bitcoin's fixed supply schedule cements its position as the hardest form of money. Echoing this bullish outlook, Dan Held projects that Bitcoin could ultimately surpass gold's market cap, valuing a single BTC at over $1.1 million. Crypto's journey has only just begun. The most powerful chapters are ahead. Stay connected, subscribe, and turn on notifications so you never miss a market move.
I mean, I'm very happy to see the world retry the hard money, prior centuries, gold-based situation. And, safety, I mean, I'm kind of just pragmatic. Let's see how the market progresses. So I was just thinking, when people were talking about safety and like return to a digital gold standard, basically, I'm like, okay, I'm down for that. But let's first pass physical gold, which is a kind of milestone, right? And Bitcoin is like, it's getting more realistic, right? It's like less than 10 times away, even though gold is like 3 times up compared to in the past. Another factor is apparently a lot less of gold is in ETFs than Bitcoin is in ETFs. So if you look at the size of the gold ETF market versus the Bitcoin market, it's not 10 times away. It's like much closer. And so I was even thinking that, a lot of the sort of older generation in the US, I think, are the people that buy the ETFs. They're the people that just want to call a broker and have a verbal conversation to buy something. And so they weren't easily able to get Bitcoin, but now they can buy it by calling a broker. That, it's not new money. It's reallocating from their savings, their portfolio, right? So I think, if they call the broker and say, I want to buy some Bitcoin ETF, and then the broker says, what do you want to sell? They're going to sell the physical gold ETF to buy the physical Bitcoin ETF. It's a logical thing, right? Mm-hmm. And so I think because the gold ETF market is a lot smaller proportionally than the Bitcoin ETF market, that could have a more marked effect than people speculate. But I'm not really an expert on the gold market, so I'm not sure. There's presumably some other market for gold where governments are trading physical gold in vaults and stuff. So I don't know how the market breaks down in terms of what influences the price, but yeah. I like that Bitcoin calendar. I was talking to that guy. Yeah, there was a guy wearing a calendar t-shirt at the conference. I think it might have been something to do with it.
Oh, yeah.
So I was saying it'd be nice if somebody could make a physical clock that's doing this. And it would be possible, I think, because it's not too intricate in the metrics it's saying. So you could make little dials and stepper motors that are tracking the chain. Yeah, I think, of course, Bitcoin is a lot more than digital gold. And as you say, it's much harder money. I mean, firstly, the inflation rate or the new supply rate is now a lot lower than gold, but also gold can be reactive. So if the gold price is high, they'll mine faster.
Yeah.
Because they'll be incentivized to do so, or gold mines that were not economical at $1,000 an ounce are now viable at 3,000. So they go rush and reopen them, and then they work, 3 shifts instead of 1 shift. They crank it up, and that, of course, if you expand the supply, that will take the edge off the price. And Bitcoin doesn't have that.
That's the stock to flow.
Yeah, it's pure. I mean, I think, and of course, the other problem with gold is it's funny because the gold bugs like Peter Schiff will argue that gold is better because it has industrial uses and it's used for jewelry, but that's actually an impediment.
Exactly.
Because that's competing with the monetary use. So Bitcoin is a pure monetary use commodity. Yeah. It's actually a better commodity money, in my opinion. And it's not elastic in its rate of supply.
Imagine buying into the world's hardest money while most investors still write it off as a fad. Adam Back says that's exactly the arbitrage Bitcoin offers today. Adam Back frames Bitcoin not only as sound money but also as an arbitrage opportunity in today's financial system. He recalls his early experience in 2013 profiting from exchange price discrepancies, where Bitcoin traded 1 to 2% cheaper on BTC compared to Bitstamp, by cycling funds between platforms until the inefficiency disappeared. While risky, this highlighted Bitcoin's ability to expose and exploit mispriced markets. Back extends this view to the present, arguing that the market still undervalues Bitcoin because of persistent skepticism. Despite 15 years of proven resilience, many dismiss it as a passing fad, which he sees as evidence of mispricing. In his words, Bitcoin is a screaming buy for those who understand its monetary strength. In an era of aggressive fiat printing, he stresses that harder money like Bitcoin should appreciate as quickly as weaker currencies lose value. Yet, not all analysts agree. A recent study notes that Bitcoin has yet to fully meet the criteria of money, medium of exchange, unit of account, and stable store of value, due largely to its volatility. The debate continues: is Bitcoin today's clearest arbitrage, or tomorrow's global currency? Let's get back to the video.
I mean, I look at it as an arbitrage. So, I mean, like an arbitrage is Bitcoin is cheaper in, I don't know, Korea, like South Korea or somewhere. I don't know, maybe that's a bad example, but, there's some countries that had like capital controls and Bitcoin was persistently selling at a premium there because it was a way to get capital out. And then people tried desperately to figure out, how do I get a bank account there? Or they fly backwards and forwards with
Wasn't
cash.
this what SBF was doing?
Yeah, supposedly. And it might be true in some extent, because there were things like that. I saw for a while, I was doing different kinds of, exchange Bitcoin arbitrage in 2013, because I could see that BTCE would persistently be 1 or 2% cheaper Bitcoin there compared to Bitstamp. And so I would wire money to BTC, and I didn't trust them. So as soon as I got the notification, I'd snatch the Bitcoin out, put it on Bitstamp, sell it, wire the money back, wait for the notification. So like about once a week, you do this. And if you keep, collecting 1 or 2%, it adds up, right? So I did it. And, eventually BTCE, got frozen by some government for something. And luckily for me, I wasn't in it anymore because somebody more professional started arbitraging it and the price became almost the same. So it wasn't worth it anymore. But yeah, so I think so coming back to Treasury Company, I think it's an arbitrage, but a different one, which is the market is mispricing Bitcoin. They don't get it. So, that's why it feels cheap to me, because you talk to all kinds of people and they're very Bitcoin skeptical. The 15 years of history speaks for itself. It's a kind of screaming buy, but they're like, no, I don't get it. Seems like a Beanie Baby to me. All these kind of 2015 era doubts. You talk to people and they still have them, right? So, I guess the point is that harder money should be good in a world where people are printing a lot of fiat. And so, if nothing else, it should go up as fast as fiat is going down, right?
Yeah.
And that's pretty fast. And then you've got the adoption curve on top of it, right? So it's actually going up faster because, of course, as more people come in, as it's scarce, it's going to make it go up faster because it's smaller than fiat and there's a lot more people that could come in. So, but I do think eventually, Bitcoin gets saturated. Like everybody who wants a Bitcoin allocation has got one and they've got as much as they want. And the adoption curve will stop because it's done. But there'll still be people who, I think it'd still be interesting to hold Bitcoin though. Stop in terms of adoption, not in terms, I think it would become, because I think you're looking at, with the Bitcoin history, you're looking at 2 factors. One is fiat debasing, so the opposite of that, right? Yeah. Bitcoin is going up because it's scarce, fiat's going down because it's becoming increasingly debased. And then the other thing you're looking at is the adoption curve, because there were very few people and now there are more people crowding into the same hard money, right? And so what I'm saying is that eventually the adoption curve is done because everybody has it. It's like mobile phones, right? Now I say, you're not going to get, maybe phones get a bit more expensive because they're more featured, but you're not going to get, a huge wave of new users because everybody has the internet.
Scarcity remains Bitcoin's ultimate weapon. Only 21 million will ever exist and millions are likely lost forever. With each having slashing new supply, the competition for what's left is intensifying, while institutional demand through ETFs accelerates the squeeze. Unlike gold, Bitcoin's issuance is fixed, making it immune to supply shocks when prices rise. Markets may still dismiss it as volatile or speculative, but that skepticism is exactly what fuels today's mispricing. As capital rotates from traditional assets and fiat continues to erode, the window to secure meaningful exposure narrows. The flip from doubt to adoption could be sudden and life-changing for those positioned early. When demand collides with hard scarcity, will you already hold Bitcoin or be chasing it at much higher prices? Early movers win in crypto. Drop your thoughts in the comments, share this with your network, and subscribe with notifications on to catch every shift in Bitcoin, Ethereum, and digital assets.